Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Caliber Home Loans. At Caliber Wholesale, our products make us different, and our people make us great. Caliber Home Loans Incorporated is an industry product leader with a full offering of core conventional and government products, coupled with our innovative non-agency portfolio lending products. Contact us to learn more.
Welcome to Master of the Markets. I'm Barry Habib at MBS Highway. This is created exclusively for Mortgage News Network, brought to you by our good friends at Caliber, who have so many products that we've talked to you about. But you know what? They'll even help you with foreign nationals as well. You really need to check out the way that they do this in helping you secure financing for them. All right, well, we did get a lot of news last week. Everything from central banks like the Fed came out and was very dovish. Now, even amidst dissension by some of the Fed members like Esther George, who were vocal in saying that the Fed should be hiking rates now, Janet Yellen, who holds the hammer, is about as dovish a Fed member as there is. The Fed chair really laying out that probably not any option to increase rates further. Remember at the beginning of the year, at the end of last year, we're talking about the Fed hiking rates 4 more times this year. You heard it from me several times. It was going to be very difficult to do. Perhaps they might squeak one in there, but I think that's going to be a tough task given the disposition of Janet Yellen in leading this. And also the Fed's afraid. You know, we saw the Bank of Japan, they just took no action, and the stock market there really took a negative move. And we all know what happened here in December. The Fed hikes just 25 basis points off of zero, and our stock market takes a big dive. So I think the Federal Reserve is kind of a little worried here that the market may throw a tantrum if they do hike rates. And of course, the currency market's not behaving the typical way you'd see. The Japanese yen actually had strengthened after the last move to go to negative interest rates, and that's the opposite effect, a total backfire. They wanted their currency to weaken, so it makes their exports more affordable and hopefully would have boosted their economy, but the yen got much stronger. Go figure. It's a very crazy time. This chemistry that's going on and the experimentation by the central banks have never been done before, and seeing the central bank here in the U.S. keep interest rates at zero or so low for so long, never been done before. You know, Carl Icahn saying that there's going to be a day of reckoning ahead for this. It's some scary stuff out there for what's prognosticated for some of these unintended consequences based upon these lower interest rates. All right, we also got housing news. And as has been the case, the housing news was pretty strong. Very good on the existing home sales, very good based on Case-Shiller, about 5.5% annual appreciation, almost Goldilocks. That certainly is sustainable. And as we look ahead, we see inventory levels remaining tight, and that should continue to support prices. Now, as long as they don't overheat, and of course, real estate's local, some markets are going to be hotter than others, then you have to take a good look at the job market. But we should see a good continuation, at least on a national level, of real estate prices. We also got inflation news last week, and the inflation news was something that I think was a bit surprising because inflation came in very low. Now remember, you see oil prices go up, you think that that potentially could be pushing inflation a little bit higher, but was not to be. Inflation actually dropped when we take a look at the PCE, the personal consumption expenditure. That's what the Fed really likes to look at. Went from 1.7 year over year to 1.6, so very low and beneath their 2% target. Another reason why it doesn't look like they're going to be hiking anytime soon. But we also saw the employment cost index. Now, those of you who remember Alan Greenspan, this was his favorite measure of inflation, wage pressure inflation. And when we take a look at what has happened in the last quarter, remember the big increase that we had seen by so many states in the minimum wage. And that certainly was expected to push this number higher. However, not to be. Wages on a year-over-year basis, the last quarter reading year-over-year was 2% increase. It dropped to 1.9. So a little bit of worry here as to what's going on. Income's not rising. We don't see any inflationary pressure. Again, likely to keep the Fed on the sidelines. But even with this, mortgage bonds didn't respond the way you think they would. You know, mortgage bonds usually love, as the bond market in general usually loves, low inflation numbers because it preserves the value of the fixed payment that's received in interest from that bond. But we're not getting that, and that's kind of a weird dynamic that we see happening. It's like the markets are kind of confused right now. So what's ahead for us? Well, I think we will see the stock market potentially go through a period here where there might be some consolidation. We might see earnings continue to disappoint, and maybe we might see a slightly lower move in the stock market. That could help mortgage bonds. We did see the 10-year Treasury hold at 190, and I think that was an important level to see yields hold. It did move a little bit above it for a day, then came right back below it, and is holding there currently. I think that we could see a little bit of an improvement in interest rates ahead, and perhaps some rockier times for stocks. We'll be back to you next week. We'll see how we did. Hope you have a great week ahead. Bye-bye.
Your reputation with your referring business partners depends largely on the lenders you recommend. This is why you'll want to choose a partner who shares your commitment to customer service. At Caliber Home Loans, our products make us different and our people make us great. A leading product innovator. In addition to our core conventional, government, and jumbo loans, we've created our own non-agency portfolio lending products. These enable you to assist creditworthy clients who can demonstrate the ability to repay. To learn more, visit us online at caliberwholesale.com.
This is Mortgage News Network.